What's up, guys? Alvaro here, and welcome back to the Bilingual Stock Market channel. Let's go ahead and talk about some stocks and about the absolute bloodbath that took place today in the markets. And as usual, on Tuesdays, today my friend Mario is going to be joining me. What's up, bro? Good evening. How are you?
Hey, good evening, Alvaro. How you been? Thanks for having me.
Doing pretty well, man. And take a look at what happened today. Today we can say once again, what a day, what a day. So the markets
One of the worst days, right? One of the worst days since 2020, I guess.
Yeah, unbelievable. Yeah, Russell 2000 went down 3.91%. NASDAQ down 5.16%. Dow Jones down 3.94%. And the S&P 500 went down 4.32%. An absolute bloodbath across the board. On back of the CPI data, the report that we got today, and it was way hotter than expected. And the most important metric or reading of the report is the core CPI, which came out reflecting an increase month over month of 0.6% versus 0.3 estimate. The year-over-year increase for the headline reading came out at 8.3% versus 8.1% estimate, and we have a bunch of categories that you can show us that came out very hot. So this was a very big pie in the face for the bulls today and for the inflation peak people, right?
Yeah, because like I was mentioning it to you today morning, right? There was so much arrogant optimism going into something which you have no idea about, and they got slapped literally, because yesterday you should see the option flows as well. Almost every single stock had the put to call ratio where the calls were like peaking. Everyone was buying calls because they were so bullish. They're already made up their mind that the CPI is going to come lower. Inflation has already peaked. Everything is going to be like normal from now. Fed is not going to be aggressive from now.
Yeah, and the bulls were front running the report. So the S&P 500 went up 6% in a matter of 4 trading sessions. And this is the result. So now for the most part, the bulls returned or gave up all the gains that were gained since last week. A very nasty day across the board. And there are some categories that tend to signal that inflation is here to stay. So we had shelter going up 0.7%. Shelter represents a 30% of the core CPI, which happens to be the most important reading. We had food going up 0.8%. And we had electricity going up 2.1%. Apparel, bro. So where is the inventory, accumulation at? Because we were supposed to be seeing some sort of, or we were supposed to be seeing inventories piling up. Where is it at? If apparel went up, 0.2%.
They're piling it up and increasing the costs. That's what they're doing.
So transportation goes up 0.5%. So when you
note that the one thing I got to add here about the transportation, even with the energy down, the cost for transportation services still went up. Even with oil coming back lower, even with the diesel cost coming back lower, one of the major component to add up to the transportation, they're still up. Like what?
So inflation is becoming sticky, obviously. And in my opinion, Mario, I don't know what maybe you think about this. The Fed needs to weaken the job market before thinking about defeating inflation, right? And last week we got last week we got a jobs report that came out as expected. Wage inflation also came out better than expected, or hotter than expected. So the Fed has a very tough job ahead of itself as of now. And by the way, the Fed futures as of now are starting to price in a 1% interest rate hike in the next Federal Open Market Committee, which is going to be taking place on September 21st. Let me show the guys over here the Fed futures. Yeah, so as of now, we have a 34% likelihood for a 100% point hike to be approved in the next Federal Open Market Committee. And on the flip side, we have a 66% percentage or likelihood for a 70 basis point hike will be the case in the next Fed Open Market Committee. So the 50 basis point hike is absolutely out of the table. It's like
out of the window.
It does no longer exist. And now the big question is what the reaction of the markets is going to be looking like if we start pricing in a 100-point hike. So that is something that is worth to be pointed out, or this is something that is important to consider, right? Because this is something that we were not even thinking about a week ago, right? Yeah, 100
because
100 point
I think a month
hike.
before there was no 100-point rate hikes, like 0% expectations for a 100-point rate hike a month before. There was like 23% expectation for 75, and almost like 60% of people were believing that the Fed is going to do 50. It's funny how much change that 1 month can bring.
Yeah, and on top of that, if the Fed happens to carry out a 100% hike, this is going to be a historical hike, Mario, that we haven't seen in a bunch of years. And obviously, then the discussion or the concern about the impact, the negative impact that these hikes are going to have over the earnings of the companies is going to be once again on the table. And keep in mind, guys, that the new earnings season kicks off on October 17 with the big banks. So how lower are the earnings of the most important companies going to go if the Federal Reserve keeps on hiking rates in a very aggressive way in order to control inflation? So that's a big question that we have as of now on the table. So very nasty report.
I agree.
What do you think, Mario? So we had a very big red day today. As I just told you guys, what do you think about tomorrow? Do you think that the markets are going to be able to pull off a turnaround Wednesday?
Whipsaw Wednesday.
Yeah, or do you think we're going to keep on going lower tomorrow after such a big decline that we saw today?
I mean, like, I won't be surprised if they stage a rally tomorrow, like a dead cat bounce. So like we might see to like 397 to 395 to be tested to the upside.
This is the SPY, by the way, guys.
Yeah, this is SPY. Yep. If they do bounce, they might get to this 395.78 all the way to 397 to the upside if it's bullish. But I do believe that there is some unfinished business to 390 to the downside. So they will come back down. You see this trend line, which has been holding up right now, that from the June lows, which held on to on September of 8th before bouncing from 390. And we stopped right at the penny over there at the same trend line. But if they come back to 390, they break under 390. And if they break under 388, June lows is next.
Yeah. Okay, from a technical standpoint, this is not a very this is an ugly looking chart. If you take a look at minor time frames, we had a very negative day. But from a macro standpoint, Mario, do you think that we have a fair chance of revisiting or retesting those June lows?
Yeah. I agree.
3,600 or pretty much 360 points in the SPY, give or take?
I agree. Possible.
Okay.
Because like, I'll tell you why. Until Monday, I was like, a market was giving me this impression that this was just another lower high. If you like, take a look at here, there is this low here, higher low, there is an higher low. And then like, we just like pushed higher. I was under the impression that this is just another higher low. But I also mentioned that even though this might be another higher low, you got to keep an eye out for the stop on August 16th, which we got rejected at the 200 SMA. We came back lower to form a lower high. We came back lower to form another lower high. And now we are coming back down. So if we break under 390, I won't be surprised if they punish it lower all the way to test the June lows or fill this gap at 378. So That's something to keep an eye out for.
If we take out 3,900, we're going to be making a lower low, which is going to be very, but very negative. And that might be opening. That might be potentially opening the door to retest the June lows at around 3,600. Yeah, absolutely.
Exactly.
So
and 3,600 is important because, like, if you take a look at the weekly charts, you can see, I won't be surprised if they even undercut 360 for a while to trap the bears into thinking that we're going to go lower, only to reverse back at 357, at least for now.
Yeah, so
357 is a 200 SMA in the weekly charts.
So do you think that the bulls can, let's say, can put a case on the table in order to go higher here?
I mean,
forgetting about the technicals, like, okay, I don't know, whatever.
They need to get above 402.50
or whatever, or the Fed won't be very aggressive because they don't want the U.S. economy to go into a recession and stuff like that. Because don't fight the Fed, right? But it looks like the bulls have run out of ammunition from a model standpoint, and that's very, but very negative because as of now, they have the technicals against them. Today, they closed below the 5-day moving average. They broke the 100-day moving average to the downside. So once again, the bears are in total control from a technical standpoint of both minor time frames and major time frames, correct? But on top of that, the bulls don't have an argument, Mario, over here from what I'm seeing in order to say that we can go higher, right?
I agree, because we might see some dead cat bounces along the way, but as long as price
in a straight line,
exactly. As long as price is under 402.50, I'm not bearish. It's under the 50 SMA, it's under the 100 SMA, it's under the 20, it's under all the moving averages. I'm like, nope, not bullish. And I mentioned it in my video as well. Once SPY breaks under 400, I'm not bullish. I'm completely bearish.
And on top of that,
400 holds, under 400, nope.
You don't use the RSI, the relative strength index. I just took a look at it on the 4-hour chart, and the RSI of the S&P is at around 36 or 40 points. We are not even oversold, Mario. So in my opinion, I could be mistaken. Obviously, we still have a lot of room to the downside here.
Oh yeah, we still have a lot of room to go.
Oh yeah, a lot. Triple Q, Mario, what are you thinking about over there, please?
Another ugly looking chart.
Oh yes.
Look at that. Jesus Christ. Yep. They almost held on. They all barely held on to that. They're almost there. QQQ is actually almost there, to be honest with you. They are barely held on to that 393 level, 393.56. Tomorrow morning, if they open under it, they can run a test at 390 again, which was the lows which we had a while back, September 6th.
Correct.
Ugly. So if they open about 393.56, we can see QQQ running a test to like 297 to the upside. But as long as price opening under 293.50, they can run a test to 290 to the downside, followed by 287 or all the way down. QQQ has a lot of room to downside, if I'm being honest, compared to SPY.
Yeah, a question mark that I have in my mind as of now, Mario, is the 10-year Treasury yield. So we ended up going down today until T managed to pull off a green day. So the big question here is, so let's say that the markets start to price in or start to assume that we are going into a recession. So that is obviously that is very likely to put a bunch of downwards pressure over the yields and over TNX more specifically, or over the 10-year Treasury yield. So maybe that is something that might be helping the bulls from a mechanical standpoint if we see the 10-year Treasury yield dropping like a rock.
Algo, technically 10-year didn't go down today though. It actually went up.
Correct. So we saw TLT pulling up into the close.
Yeah, and maybe right? In the 10-year actually held
someone
on
is
to
lying
the
here.
gains.
Very good. So someone is lying here, Mario. Both went up today. TLT and the 10-year Treasury yield. So someone
Both
is going
were up. Maybe it's just I don't know, that cat bounce in TLT. We got to see the 20-year.
Yeah, it was a bit oversold. Yeah, it could be a dead cat bounce. Or it could be that the markets are starting to think about a recession, right?
Okay. I know why TLT went higher, because the 20-year actually went down.
Okay.
The longer end of the curve went lower. It's just the 10-year and the 2-year curves were higher. But you can see the 20-year yields, which TLT actually tracks, actually went down like yesterday. So you can see the charts here, which is absolutely reverse of TLT. So you can see the last few minutes, like it just dropped like a rock, so which popped the TLT to the upside. So yeah, makes sense now. Yep.
Okay, there you go. So we still need to keep a close watch on TNX.
Yep.
And obviously if the markets, as I just told you, Mario, start to price in a recession, so how high can TNX keep on going? That is something that we will find out in the upcoming trading sessions. Let's go over some stocks, Mario, over here. Meta, Apple, Tesla. Meta, what do you got? What do you have over there on Meta?
Bro, Meta is looking ugly.
Yeah, it is about to hit a 52-week low, I think, right?
It is actually down there. It's actually hit a 52-week low.
Yeah. Very ugly looking chart.
They broke the consolidation zone to the downside. It's not a good looking chart. They might have marched towards 150 to the downside. If they fail, I wouldn't be surprised if we see 140.
Yeah. None of you guys should try to take a trade on Meta unless the indices go higher, guys.
Come back. Yep.
Yeah. This is a stock that is very correlated
bearish
with both the NASDAQ 100 and the S&P 500. So watch out for that support, right? $160. If it happens to be taken out, we are very likely to see lower prices in the case of Meta.
100%.
Yeah.
100%.
Or if Meta happens to consolidate slightly above $160, then that might be that might be an opportunity in order to ride the stock of this company up to the next gap, which is at around. No, what price did Meta close at the trading session today? 153.
167 was yesterday's close, and today's close is 153.30.
Correct. So this stock make
now,
a new 52-week low today? No.
Yeah, it did. That's what I'm saying.
Okay,
a new 52-week low, and they were consolidating for a while, and they broke under the consolidation zone, which is not a good sign. So I can see it running a test to 150. And if SPY is breaking 390, I wouldn't be surprised if we run a test to the COVID lows, which is at somewhere around 137 to 140 range.
Yeah, that would require a bloodbath in the another bloodbath in the S&P and the NASDAQ 100. Okay.
Yep.
Or if we
not in one session, a slow drain to the downside sort of takes.
Or if we happen to see a turnaround Wednesday tomorrow, if Meta happens to recover those 100,
I wouldn't be surprised if they run above and then get rejected at, like, let's see, what's the top of this range. If they run higher, I wouldn't be surprised if they get slammed down at 155 to like 157 area.
Correct. Or if it bears above 155 with the indices going higher, that might be a long trade over there, a quick trade, I would say, right? Because we might see a dead cat bounce. Who knows? There you go.
Let's see the weekly chart. Weekly chart is also important. So because, like, you can see the range. If spine QQQ bounces off from 388 or 390 for some reason, and if the range is holding as support, above 157, I like longs on Meta for a trade all the way to the top of the range.
155.
157-ish. 157-ish. Yep.
Okay, good. Apple, bro, please. Apple got absolutely killed today. I think that it gave up all the gains that it...
Yep. That's it, done. Whatever it made, like yesterday, day before yesterday. Yep.
Yeah, the stock of this company went on an absolute tear yesterday. It went up like 6%, I think.
Yep.
And how much did Apple drop today, percentage-wise?
5.87.
There you go. Pretty much the gains that it gained.
No, this is after a huge gap down, by the way.
Yeah, I mean, terrible.
Like they gapped down already under yesterday's lows, and then like they went even down even further. 9 points, at 10 points, they almost gave up in one day.
What trade would you be taking on Apple other than puts?
Tomorrow, 152.55 or 150.60 is what I'm watching for tomorrow. So 152.60 is where the 100 SMA is on Apple, which also marks the lows from 3 days back. on September 8th. So that might bring some buyers in at these levels. But if bulls fail over there, I won't be surprised if Apple runs a test to 150. If they break under 150, watch out for 147 to be quick. That's what I'm watching for Apple.
And it all depends on whatever the NDX and the S&P are doing, obviously. And
exactly.
And you guys know that Apple is the most important stock of the market. So whatever Apple goes, so does the market.
So will the market. Yeah,
correct.
Exactly.
And let's wrap it up with Tesla, Mario, please.
Tesla. Tesla, I think you got to take over on Tesla. You traded more than I do.
But I want to know your opinion about it. So let's say
just a minute.
Yeah.
All right.
I should have closed a trade that I opened last week with 50 shares today pre-market. I didn't do it, Mario. So now I regret it. It is what it is. So I am holding the bag over there with 50 shares, but nothing crazy. I closed a trade with the SPY pre-market with 75 shares. I ended up making some money there. But this was another trade that I should have closed. But, you know, the trend is pointing higher and stuff like that. And yeah, whatever. Yeah. Then we got the CPI. And we got the Elmo with the fire.
Yep, they absolutely took it to the woodsheds in like 2 candles. Yeah. ES dropped like 110 points in 15 minutes, by the way, in the morning.
Unbelievable. Yeah, absolutely.
It's like absolutely crazy. Yep.
Okay.
So Tesla, they rejected the 200 SMA today. 294 was rejected and they came back lower. I'm actually surprised how well it held, to be honest with you, compared to the market.
Some stocks held pretty well today, despite the fact that we saw a bloodbath. So you're looking at Enphase Energy, you're looking at First Solar. Tesla was one of the stocks that kind of held today, but it ended up going down, obviously. It was a bloodbath.
It was ugly, man. Like I was like sitting here and I was watching at Enphase and I was like, dude, what are you doing?
Yeah. So for the ones that want to buy puts on Tesla, what would be your advice? For tomorrow's
Tesla, session? if you want to short Tesla, you gotta wait for the gap to be filled and then stock to be going down lower. 289. If the stock fails and drops below 289, short away, because I won't be surprised if Tesla comes down to 283 or run a test to 277 to the downside.
Correct. And
to the upside, if you wanna play to the upside, we'll wait for 295 to be taken out, and 295 is taken out.
Yeah, that's a 200-day moving average over there, right? At 295 or something like that? Okay, that's fine.
Exactly.
And mind you guys, because Mario just pulled up the relative strength index chart, so none of the stocks that we went over in this video are from a technical standpoint oversold. And we're talking about very important stocks, guys. Apple, Tesla, Meta. So in my opinion, I could be mistaken, and I think that Mario would agree with me. I think that we still have more room to the downside. And in my opinion, Mario, I never buy the dip right away when we have a very big red day in the market. So usually, or I prefer waiting for at least two more trading sessions before I buy the dip, because from my experience, or if I speak out of my experience, when we see these kind of very big days, and the next day we see follow through, and that might be the case tomorrow. Who knows, right?
Because like we never know, right? We got to wait for confirmation, so we never know what will happen the next day. I'm bearish. I've always been bearish, and I'm like this bearish now. Once the 400 was taken out to the woodsheds in SPY, so anything can happen tomorrow. They can come all the way up to run a test to 400. So if you're trading options, and if you follow Alba, you already know it. So the one thing I like about him is you don't go for this 2-day expiration nonsense. So give yourself some time.
Weekly and out of the money. There you go, gambling.
Exactly. Give yourself some time on puts. Give yourself some time on calls, or whatever you're doing. So just you can predict the price, but there's no way you can predict the time. So if in the volatile markets, lower your risk, lower your position sizes, just so that you don't get whipsawed around in the volatility. So that's all it is for me.
In summary, Mario, you are perceiving some sort of another big decline in the markets coming up, right?
Oh yeah, because I told you, and I made the point pretty clear, right? Like until under 400, I'm bearish, regardless of what it is. Under 400 SPY, bearish. Under 300 QQQ, bearish.
There you go.
So as long as those are reclaimed back, no, I'm still leaning on to the June lows probability here. If 390 is taken out, that probability goes higher for me.
Awesome. Bro, tell the guys about your Discord and your Patreon. I would say our Discord because I am very active in your Discord chat. So tell the guys, because you guys have the links down below in the description box of this video.
So if you guys are interested, go ahead, check out the link to the Discord and Patreon. I do post updates on SPY and QQQ every day before market open. You have great traders there, including Alba and multiple others with great experiences. They can help you out as well. Go ahead, check it out. Link is down below in the description.
Mario is a YouTuber that is very active in his Discord, which is not a common characteristic. Let's just put it that way. So if you sign
taking
up
a jab, I say,
for his Patreon, you're gonna have access to his Discord, and you're going to be able to ask Mario any questions about the markets during the trading session. And on Sundays, we are getting in the voice chat, Mario, to go over stocks for an hour or an hour and 30 minutes with a bunch of good traders. So go ahead and take a look. Check out the links that are in the description box of this video down below. Thank you very much, bro. By the way, we have Quadruple Witching on Friday, so that is going to be another very interesting...
Something to keep an eye out for.
Oh, yeah. We need to keep a close watch on that as well. So thank you very much, guys, and see you on Thursday. Thanks, buddy.
Peace.
Enjoy the rest of your day. Bye, guys. Take care. Bye-bye.